In my opinion today, the biggest investment mistake being made was forcing trades, doing any buying or any selling of those core long-term positions. Because, and I can be wrong, but when my short-term research shows me that the underlying emotions in the stock market are so exuberant, I don't want to be a buyer. And when my medium and longer-term research show me that people are happy and that things are good and that the stock market could continue higher for another 3 to 6 months, I don't want to be a seller either. So I purposefully sat on my hands today and did not make any trades in my core long-term holdings. I shared with my members on Friday and this morning, I shared in my newsletter on Saturday morning that I thought we were coming up to this position where that the stock market could take a breath because it was up so much over not quite the last week and a half that just naturally, again, nobody can sprint forever and you need to take a break and just chill. And that's exactly what I thought and I said on Friday could happen today, and it is. Specifically on the S&P 500, SPX. Here we are, at least as of about 2:36 Eastern Time, not confirming the breakout above 6,836. Back down below that level. So technically the last breakout is above 6,696. In all technicality, in my opinion, that's the level that the S&P 500 could come down to. I really don't think we get that far. I kind of think we chop, maybe come down a little bit before making even higher prices. So the next bullish case for the stock market will be confirming the breakout above 6,836. The next really bearish thing would be confirming a breakdown below 6,696. So pay attention to this channel and watch these levels. I want to see how gold ultimately closes today as of about 2:30 Eastern, just barely confirming the breakout above $4,224 an ounce. But let's see how it closes. If it can confirm the breakout, in my opinion, the gold then could possibly make brand new all-time highs. If we can't confirm the breakout, maybe we chop sideways, maybe it comes down, but watch these levels. As far as entering a new gold position, wow, if you decide to be a buyer, be very, very careful at these higher levels. I absolutely would put in a new stop sell order if you decide it's right for you to enter a new gold position. If you're right and gold does generally tick higher, then later on you can trade in that stop sell order for a trailing stop sell order, but just be very careful anybody buying gold here. You know me, if you pay attention to my channel, I was buying again down when it was about $4,065 an ounce. Natural gas is exceeding my expectations here, so far looking like it could confirm the breakout above $4.52 a cubic foot and $4.62 a cubic foot. You know me, a week and a half, 2 weeks ago, I happily exited the last of my long natural gas position and said I am still short natural gas. Well, that short position, especially after today, is starting to hurt. Let's see what happens tomorrow. If natural gas is up tomorrow, I fully realize it is statistically not a good time to exit my short natural gas position. But personally, if it's up tomorrow again, I'm really not willing to take much more pain in that trade. So let's see what happens tomorrow. But yeah, tomorrow, if natural gas is higher, I could begin to exit that short natural gas position that I do. Yeah, at a loss. That's okay. It happens sometimes. Small loss that I'm willing to take. 2 trades here that I potentially missed because I was doing so much traveling last week and was enjoying myself. The first one here in crude oil. And I said to my members last week, hey, could be a nice time to go long crude oil, but I was traveling and doing other things, did not make the trade myself. That's okay. Trading and investing is like the bus schedule. Yep, the bus might take off without you and you see it leaving and you're upset. Oh, I missed the bus, la la la. But if you just look at the bus schedule, you know another one's coming. So another opportunity will come in crude oil for me to make, and I will just patiently sit back and patiently wait for the next trade. The financial news shows don't want you to be patient. If you miss a trade, if I miss a trade, I want to be patient, not force trades and try to play catch up because that never worked for me. It probably never worked for you either. So if you are long crude oil, Congratulations, that's awesome. As far as me, I'm going to be patient and wait for the next trade. The other trade that in hindsight I missed here was on Friday, shorting my favorite bond fund. I did say to my members Friday morning in the pre-market email, hey, I'm traveling today, but it looks like we could be making a bottom in longer term yields if they pop up from here. That is bearish for longer term bond funds. And that shorting those longer term bond funds could be a trade. Turned out it was. I didn't take the trade myself. I am, again, not going to play catch up. I will simply wait for the next bond fund trade to come to me. Here on the 10-year yield, though, looking like a unconfirmed breakout so far above 4.07%. If we can confirm the breakout in the 10-year yield tomorrow, technically the 10-year yield could run higher to as high as 4.20%. Watch these levels, pay attention to this trade, this channel also, and we'll see what happens. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.